Dan, you've been listening into the president's press conference, and I'm wondering, as an analyst who covers a lot of these names, at what point do you start actually modeling in? Do you wait until their contracts, or do you acknowledge that there's some sort of expectation and therefore you get excited alongside? We saw the stock react in the late afternoon.
Yeah, look, Melissa, I think it's something you're going to have to start to model in. I mean, not just for names like Oracle, but especially when it comes to any of these sort of data center innovation plays, the Palantirs, Microsoft and others. And I think now it's a question of the multiplier effect and how quick this is going to happen. But we're seeing this off to a fast start, and everything we're seeing in the Beltway, this is going to be just really, really positive for more of the data center players, from Microsoft, for Amazon, for Google, and of course for Oracle.
Dan Ives highlights the rapid growth in AI and data center investments, driven by companies like Microsoft, Amazon, and Google, which are creating opportunities for software firms such as Salesforce and Palantir. The multiplier effect of AI spending is expected to boost the broader tech sector, though energy constraints and the need to monetize quickly remain challenges. He also notes that companies like Dell and Oracle stand to benefit from the broader wave of innovation and infrastructure build-out. While AI leads the narrative, Ives sees potential for growth in overlooked areas like regional banks and international markets as global economies stabilize. Overall, Ives believes AI-driven spending will generate significant momentum across tech and related industries, with a focus on earnings growth and emerging opportunities in less discussed sectors.
Hey, Dan, it's Dan. When you think about some of these numbers being thrown around, there's no specifics here. Microsoft gave some CapEx guidance, I want to say a few weeks ago. They kind of guided to maybe $80 billion in the next year or so. 40 of that was going to be overseas. Don't you get to a point where you can only build so much data center infrastructure here in the U.S., especially for these big multinationals who have to serve other places around the world? And the last part of this question is, and what about power consumption? Like, at some point, there's only so much data centers you can build in the near term because you are power constrained.
Yeah, Dan, I mean, you hit on a great point, because the reality is we could talk about these CapEx numbers, but it's about, you need the grid, you need the energy, and we could talk about nuclear and other names like ACO and others. But if you look on the data center side, I mean, there's essentially going to be more data centers under construction than actual data centers. But now, how quickly that gets built, and especially when we'll see it in earnings, but for Microsoft, for Amazon, for Google, the CapEx is there, but now it's about monetizing and how quick. That's what the street's going to be focused on for the next 2, 3, 4 quarters.
Dan, it's Tim. So let's do that then. So let's act like today didn't happen. As you were looking at the universe of getting exposure to AI across, a number of different, let's call it just ancillary industries, but or straight out of Broadcom, or straight out of some part of the legacy players we know about. Where are you coming into today before this news?
Look, Tim, I think you're looking at not just Broadcom, but what I believe is sort of the second, third derivatives. I think this is bullish for software. I think when you look at names like Salesforce.com, Mongo, of course, names like Palantir and others, because as the data centers get built, it's skating to where the puck's going. Where are the use cases? That's really what the key is going to be over the next 2, 3, 4 quarters. And I think this is bullish for software, because data centers, they get built out, the use cases are going to be software driven.
But the use cases aren't clear right now. I mean, are we going to be at a point where we have the data centers in place, but the use cases, that part of the equation hasn't exactly caught up?
Yeah, I think right now it's starting to catch. I mean, I think we saw it with Benioff and Salesforce. We've seen it with ServiceNow, Palantir, and now the use cases are really going to start to explode. Because these companies, when you talk about all the AI CapEx, it's about the multiplier. For every dollar spent on an Nvidia chip, there's an $8 to $10 multiplier across the rest of tech. That's bullish for all these data center players, bullish for software, and that's going to really be the focus going into earnings season in terms of playing out these sort of next derivatives of AI.
Yeah, Dan, I went sort of AI adjacent. I looked at Dell, and I'm like, you know what? On the margins, it's got to be good for that stock, especially given the fact that it has sold off significantly since that huge move we saw, I think it was the fall of last year.
Yeah, I think Dell has gotten overly hit. And I think when you think about ones that are going to play, of course, it's Oracle, but names like Dell, you could argue names like Cisco and others are going to be beneficiaries here, because what you're seeing over the last 24 hours from Trump, I mean, it's a green light from an innovation perspective. And that's not just going to be some of the data center players, it's all the U.S. tech players. I mean, everyone's going to try to get in on this, massive spending wave. This is just the beginning. And I think Dell clearly will be a beneficiary there.
It's not that I don't like the AI plays and I'm not thrilled to see Nvidia up, et cetera, et cetera. But when I said it earlier, I feel like there are a lot of opportunities. The surprises could come from a lot of areas that we haven't had a lot of positive things to say. So yes, regional banks have to do well if the small cap catch-up trade works. But to me, international developed large cap companies are a fatter pitch. And there are many others out there which we could talk about later in the show. No, and I don't necessarily like small caps. I own small caps. I think they work tactically. And I think in this particular year, they could work tactically. But most of that is just a mean reversion sort of thing where they haven't had the same upside as larger cap size companies. And largely that's been a result of them just not being involved in the biggest, most predominant growth story of our time, which is AI. This is the year where we might actually see the benefits of all this AI spending hit the profit line for the consumers of AI technology. Not saying it will happen, but if it does, it would be an upside surprise. And the only thing that drives stocks in the end are surprises, good or bad. So that's something that could happen. The other thing that I think is possible that could happen this year, and we've had versions of this, 2017 being a really big example, we may start seeing a situation where global economies improve so that you finally get a tailwind for international developed stocks. A lot of people don't know this. Emerging markets actually had their first good year last year in a very long time, and Chinese equities outperformed the S&P 500. If we get into a situation where the dollar continues to fall, which today is day one, so, bear with me, you will see allocators moving money into international stocks 100%. And if you do, that's a huge tailwind for an area of the market that's really had nothing but outflows for a long time and underperformance. So it's not that I don't like the AI plays and I'm not thrilled to see Nvidia up, et cetera, et cetera. But when I said it earlier, I feel like there are a lot of opportunities. The surprises could come from a lot of areas that we haven't had a lot of positive things to say. So yes, regional banks have to do well if the small cap catch-up trade works. But to me, international developed large cap companies are a fatter pitch. And there are many others out there which we could talk about later in the show.
Joe, you have the most exposure by a lot to the regional bank complex. There's Citizens, BNY Mellon, if you want to play it that way, Citizens, Fifth Third, Huntington, M&T, Regions.
Yes. So basically, and by the way, from a strategic perspective, momentum is one of the best performing strategies, if not the best so far year to date. It's up 6%. And the momentum quickly identified early in 2024 that financials were a sector of opportunity, and the regional banks were largely part of that conversation, avoiding the apocalyptic scenario that was presented in 2023. Steph points out Bank of New York Mellon, the revenue growth in that company.
Easy for you to say.
The revenue growth in that company, which was reported last week,
Yes.
You're talking about double-digit revenue growth for a company that generally doesn't deliver that. Scott, you mentioned Citizens Financial, again, seeing double-digit revenue growth. So the growth is there, Brian. The growth is there for a lot of these regional banks, and the conglomerate of the financial sector is a tremendous opportunity. It's why we have carried in the JOTI ETF the financial sector at nearly 30% weighting for the last 3 quarters. It's the aggregate of asset managers, private equity, money center banks, and regional banks finally realizing a revaluation.
Because let's be clear, it's a clear signal that these tech CEOs are being involved, number one. But think about the massive performance that they've had. They're not going to be able to keep up that momentum, number one. Number two, with what you're talking about in terms of elevated yields, okay, that's normal. What people, I think, are missing, Scott, is that this is the path to normalization.
The AI boom is driving significant investments in data centers, with tech giants like Microsoft, Amazon, and Google at the forefront. Software firms such as Salesforce and Palantir are poised to benefit from AI's multiplier effect, though energy constraints and monetization timelines remain challenges. Beyond tech, companies like Dell, Cisco, and regional banks are emerging as surprising beneficiaries, alongside international markets gaining traction due to favorable economic trends and a weakening dollar. Analysts emphasize that market surprises will shape the investment landscape, with opportunities extending beyond AI-focused sectors. Regional banks and financial institutions are showing strong revenue growth, reflecting a broader revaluation trend and potential for diversification. Which industries beyond AI do you see as the next big investment opportunities? How can energy constraints affect the pace of AI-driven innovation and expansion?